right, so this week has shown us that the market is on the move again. Interestingly, we're back in the seller's market. We had put a property on the market last Wednesday. I think last week, as of Friday, we didn't have offers yet, but as of right now, it's under contract. Multiple offers, good value property in heart of Phoenix, very close to our office. Literally multiple offers and gangbusters. Very, very strong offers, like we'd seen towards the beginning of last year. The interesting thing with that, though, is that interest rates were jumped up a little bit again this week. And when you look at the numbers, it's like, all right, we saw 7% again with interest rates. The buyers that are picking things up right now are, generally, like in this particular case, they were super, super, super strong. First-time home buyers bringing, quite a bit down, which is interesting. And it really starts this conversation of, okay, what does this market look like moving forward? And that's kind of where I wanted to go with the video this week. There were a couple of things that came up. I had conversations with a few people that I know, like, and trust, and the conversations went a little bit like this. It was very similar because with those people, it came down to what do they know about the market right now, or at least that they're hearing, versus what are we seeing in the market, and how does that completely change what they wanted to do with their property? And I think that's so important, right? It's like we come up with this idea of what we think success looks like in real estate because it's maybe something we've done in the past, or it's what has worked in the past, but we're not looking at what's actually happening in the market right now. We're thinking that this way of doing things, and I get caught up in this often, the way I've done it is what is going to work for me. The problem is that there's so many different variables that are affecting us differently than it was 2 years ago, 5 years ago, 10 years ago, that we really have to be on every week. We've got to be paying attention to what's happening. So let me give you one scenario. Buddy calls, says, hey, I saw this place. Check it out for me. Let me know what your thoughts are on whether or not this would make a good deal. So I said, all right, cool. Hold on. Let's talk through this first. So good deal. How so? I want to live in it. Okay, you want to live in it. So I know where you're living right now, and that's a great property. Let's talk about your interest rate on your property right now. Let's talk about the payment that you have right now. What are you willing to do, and what do you think how that's gonna change when you buy this next one? The question sounds more like this. So do you want to are you gonna buy this property without selling your current home, or are you gonna need to sell it? Okay, so that's the first question. And in this particular case, after looking at a quick analysis online on one of those easy calculators, I said, all right, so looking at the payment that you would have on this particular property, it looks like it's going to be X, which is almost 3 times what he's currently paying for his current mortgage to get into this other house, because the interest rates are so different. So now it becomes, are you going to sell that other house? Okay, you're going to sell it. How does that make sense? So let's work through those numbers. And that was the exercise that we're working on. So it's a super interesting conversation to me. I love it, because it's like, all right, let's beat up this plan and see what really makes sense. So by the time he makes that decision and says, yes, that's what I want to do, he's really explored that option from a standpoint of, hey, does this really, is this an emotional decision, or is this also a logical decision? Of course, when we're buying houses, and when I used to show houses for sale all the time, I would joke with the client and say, hey, it's your job to figure out where the couch is going to go. It's my job as to whether or not the numbers make sense, and to talk them through that process, because I love the numbers piece, right? That's the part that I think has to align in order for it to, for there to be options. What are the options after you get into the home? Currently, he's got tons of options. Those options just might not tie into him buying this next property, because, again, the numbers just don't align. So in this particular case, what should he do? Start with that lender, connect with that lender, which is completely different than he's really done in the past. Is the more so the emphasis on talking to the lender right now is significantly more important than giving me a call and figuring out what makes sense, because I can't help on the financing side, nor do I want to get into the weeds with anybody as to what their finances are. It's not my business, and realistically, I just need to know, let's beat it up from a 10,000 foot view and then go from there. Therefore, contact the lender, get in touch with somebody you know, like, and trust, and do it that way. I think in that regard, what are his real options? So now, if he keeps that last property, does he keep it as a long-term rental versus a short-term rental, right? So if he short-term rents that place, what does current inventory look like, and is it even allowed where he's at? Does that something he wants to take on? This last week, my wife, she's putting out these cool new videos on Instagram. They're so funny. They're amazing. And she put one out that talked about our experience with our place up north, and she handles it. She handles the management of it, because it just requires so much. And talking through the numbers, like, I'm super open with that stuff. If anybody if you have interest in knowing what that model looks like, I'd be more than happy to share it with you. But I like the long term buy, hold, set it and forget it, and not have to worry about it until an expense comes up, right? Once a big expense comes up, the team lets me know. I'm like, okay, cool, take care of it, or ooh, take care of it. But either way, at least then, it's not always in the back of my mind taking up space. I just know that stuff's getting done. The short-term model is taking up space in my head. That's that model. It's every week. It's every day. It's something new. It's analyzing expenses that you might not be aware of when getting into it, right? And that was very much our experience. Buying a place that's not close by, what does that look like? How do people manage it, or how do we manage it from afar? And in addition, what types of people do we need to have to be able to support that? And that was Rachel's video, where she talked a little bit about that. She also talked about, what expenses come up that you're just not aware of, that you just aren't anticipating, right? And I think those are very, very, very important and valid points when looking at those options. Now, on the long-term side, it's much easier to evaluate, right? I think on our side, we have a much easier time of that. We walk a property with somebody, we're like, okay, what's going to break first? How much money should you be spending to rehab the property? What things shouldn't you be spending the money on, because you're not going to get it back? And it makes it just a much more conservative, easier approach to knowing what that consistency is. That's why I like it, right? I love the consistency, and I love I'm a very conservative investor, right? Like, I feel I work really hard. I don't want to put my money into things that are not going to absolutely just show me that they're making money. That's why I don't gamble, right? When I go to Vegas, I give myself X dollars to blow. I'll do it, and that's it, because, hey, the only time you see me gambling is like, fantasy football, or, when the Super Bowl at my buddy Rob's house, right? That's about it. But other than that, like, it's what that risk tolerance is for you getting into it. Long term, not as risky in my opinion. Short term, super risky, and more so now just because of the saturation. So this video applies to people not just in Phoenix, as all over the country. There are a lot of people taking advantage of the short-term stuff. We see it all the time on half of the things that I'm posting, and that's cool. It's just every market is a little bit different, so it's really evaluating, what does that market look like? Is it super saturated? Are you going to get your return on your investment, or that you're expecting? And is it worth the time and the money, right? So to his point, and to really looking at his options, it's figuring that out. And also, I think more than anything is, okay, first the numbers, do the numbers make sense? And then what's the timeline? Like, if you want to rent out your property, if you're looking to take this and turn it into a rental, how long are you going to make that a rental? I suggest that if people are thinking shorter than 5 years, coming over to a property management company may not be your best avenue. It may not be your best opportunity. The expenses, the things that you're going to incur, you may want to consider, the selling or some other option. When people start looking more at the long-term stuff, that's when a long-term relationship with a property management company is super, super helpful. The pain points with a rental are usually in the first couple of years. So right when you take on a property, it's your home, you've lived in it forever, you're going to rent it out for, you're like, I'm going to keep this thing for 10 years. Well, your first 2 years, they're going to be the most painful, right? You're going to be spending money on things that you're like, wait a minute, my dishwasher was perfect when I moved out. Why the heck do I need to replace it? Or why is it leaking? Or why is it's, people are living in your home differently. So, we set that expectation with people up front that we're going to see things in the first couple of years with someone's house that, they've not seen before, and they need to expect that they're going to have those types of expenses. So getting through that and to bring this all back together, it's like, all right, what does this market look like? What is the plan? If you're planning on, we haven't seen an uptick like this in the market for a minute, and that's great. Moved everything almost back to the seller side of things. So if you're planning on keeping your property for longer than, say, 5 years and you want to keep it as a rental, awesome. This is a great market to do that. There's so much information right now on jobs that are coming to Phoenix. Taiwan Semiconductor, it sounds like they're now flying their people in. They're done with their first phase of that project next year. $40 billion facility. It's going to take up the whole flipping Northwest Valley. And I think that's amazing. There's also so many jobs and other companies. If you pick up the Business Journal, which was just here on my desk, I must have put it over here. But, the Business Journal is talking about, all these other businesses right now that are coming to Phoenix because of TSMC and Intel. And, we are going to be that hub for manufacturing of chips and semiconductors, microelectronics. We'll have a lot of other people in that downline that are providers to supplying the parts and the equipment to make that happen. So that's awesome. Lots of jobs that are coming here. Supply right now is super low. That's not going anywhere for a long time. New home starts are still very, very low. We need more houses. Therefore, rents should stay somewhat consistent. Now, looking at last year, January of 2022, houses between $1,400 to $1,800 in rents. They were averaging $1.28 a square foot. They jumped up in May of 2022 to $1.36 a square foot, which was the highest we've ever seen. And now they're back down to $1.26 a square foot as of January of 2023. So January 2022 to January 2023, we only saw a very small reduction. However, if you rented your property out like I had last 2 Decembers ago, now we re-rented again, barely making any more than I was a year prior. So keep that in mind if you're re-renting out your properties right now. Find out what it looked like a year ago and what the current rental rates are looking like. We've got some of that data that we've shared with you all in the past. If you want to know that particular data for, hey, what's my price point, $1,600 to $1,800? What does that look like from year over year? We can provide that to you, and it's helpful in making those decisions and knowing what our expectations should be of asking for rents. Cool. Hey, I hope this information helps. No, I was kind of all over the place today. I've got so much to talk about. Sometimes it's hard in these videos without just being super, super, super tunnel vision and saying, hey, let's talk about this one small item and elaborate on that. It's more like, hey, what's the big picture look like? And I think, the more I can do these on the big picture, the easier they're going to be, and then spin off with some other videos that really talk about the highlights, just those single points, the short single-pointed visions of what each of those are bringing. I hope this helps. Have an amazing weekend, and I look forward to connecting with you again next week. See ya.